Okay, welcome in, you trader nerds. Happy Tuesday. It is T-bill Tuesday. Don't forget to buy your T-bills. We might do it together today. And if you'd like to schedule some mentoring or you want some one-on-one sessions, look down below. Or if you'd like to join our little Discord group, we'd love to have you. It's a pretty good little community, actually. And we'll be getting together in Atlanta on Thursday, Friday, and Saturday. Looking forward to that. Just very excited about it. Just cannot wait. I got part of my car cleaned out yesterday, so I'm picking Ed and the guys up at the airport, which is going to be really kind of fun. So it's just going to be a great time. I lifted 553 pounds of weights on the leg press today. Can y'all believe 553 pounds? It was a personal best for me. I am a machine, y'all. A machine. Rah. Hey, look at this, y'all. The market is down 0.42%, but look what the big green monster says. We are priced just perfectly. Look at that, right at our 50% line, right at our point of control, as the big green monster often tells us what is going to happen. So what's going to happen for the remaining days? I think it's going to be just kind of in this area here. So good time to collect our data every day and to, just get making our little money every day. So let's see how we're doing today. In this account, 37,140. 37,140. Are we up or are we down? 37,140. Oh, okay, we're down $7. That ain't bad for the market being down, whatever. 37,140. So we're down just a bit. 5,923. Okay. So let's go to our illustrious little Greeks. 2540. 2540. Greeks and ratios. 25 and 40. Oh, we look good. Let's see. 25, 40. And that was the same number. So let me go in and get our little thingamajig so it will fix itself. Oh, no, that ain't it. Where's the count requirement? Count requirement. There we go. So we're at 7806. Wow. 7806. Why is my thing so slow? What's wrong? Oh, I put my 40 in the wrong place. Hold on a second. Why is everything moving so slow? 40 is supposed to go there, for God's sakes. What do we say this was? 7806. What's wrong with this thing? 7806. And we said this is 40. Not sure why we got a 40 down here. All right, look at that, y'all. That's beautiful. Beautiful. Nothing to do here. Just nothing to do. Let's close this. I don't want to even be tempted to do something. All right, so let's go to our little this one. This is the IRA. And we are at 84,957. 84,957. 84,957. Down a little bit. See, this is what I really like. Market's down pretty good amount. We're just barely down. 5,923. And our Greeks and ratios are monitor. Take our groups off so we can see our numbers. And we are at 100 minus 20 is 80. So 80, 92. Beth, you don't quit coughing. 80, 92. Beautiful. We're at 17 VIX. And our buying power is at 26,872. 26,872. Okay, so you're a little heavy, right? You're just a little heavy. But, are you comfortable with the risk? That's what you got to ask yourself. Now, cool thing is we've got enough data. I could close something if I wanted to, just to take a little off. Let's see what we got here. We got our naked puts, 61%. Look at that. 61%. These are 61%. I'd rather only take 2 off. Let's just take these 2 off. I'm just going to get a little, since volatility is down, y'all, I'm just getting a little, just shaving a little bit here. If we can get out of those. Yeah, so we got out of the 3600s at 875. 3600s at 875. 3600, 2 of them at 875. Exit on 5923. There we go. Oh, it almost made the whole thing green. There we go. So we made $129. Okay. And that took our theta down to, see what that did. Want to make sure we're still above 0.1. Right? But this is what we talked about the other day. Take them off when volatility is low if you can. So now we're at 87, or say 87. Yeah, 87. Let's see how that looks. 87. Come on, still be above 0.1. Oh, yeah. See how we do it? Oh, yeah. Beautiful, 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 beautiful. All right, let's close this one. Let's don't be tempted to do anything crazy. Let's get our final account. And that's the Crimson account. This is our bellwether account. This is the one that does really good. So 34 minus 8 is 26. Is that right? 2640. Oh, I hadn't done my thing yet. 2640. 26 and 40. Okay, and our net licky is 35,500. 35,500. Oh man, we're down $5. 35,500. This is what we like. The market down 0.5%. We're down nothing. Good, good, Bobby. So our buying power usage is now at 9,300. Okay. 9,300. Look at this, y'all. Beautiful. Look at this. This is green. This is green. This is green. Now, the question might be, wait, you're using hedge when calculating metrics? Yes. I'm using anything that I've got to calculate my metrics. I think that's the best way. I really do. Right? And the ultimate hedge is size. And my ultimate size is keeping my theta at 0.1. So, you know, yeah, I am counting everything though. All right, so that was good, y'all. So the question would be, everything's green, put on a new trade? No, I don't think so. Volatility is so low. We want to save it for when volatility increases. Don't do it now. I've got enough theta, right? We're doing fine. And we should be catching the market. Market's up 6.91%. We're up 4.11%. Beautiful, 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 beautiful. All right, so let's go buy some T-bills. You want to? Uh-oh, I got to open my other thing up. Let's see. So IRA spreadsheet. Let's see how many we can buy in the IRA. T-bills, 8. I can use 50% of my capital in a IRA account, so I can buy 8. Let's see if we can do that. TD Ameritrade, log in. All right. Let's buy 8 of those. I need to just have that parked in there where I can, let's see, which one of these is it? I think it's this one. Log me in, Fred. So we're going to get 8 of these. Come on. I'm meeting with my illustrator today on my new children's book. My children's book is called Blossom Possum Learns How to Save. Isn't that great? Blossom's going to learn how to save. And I wrote a book, and I'm meeting with an illustrator today. I'm so excited. It's going to be very exciting. I'm just thinking, how much does an illustrator charge to illustrate a children's book? That should be interesting. I may come out of there going, I may still learn to draw. I may take some art classes. What the crap is happening here? Come on. Log me in, Fred. How embarrassing in front of my friends. My internet connection's just terrible. Let's see if we can get it over here. TD Ameritrade. Log in. Come on, get me in. Or it may be that all of us are buying T-bills today and everybody can't log in. Reckon? Oh, get me in. Oh, well, we may have to do that later. All right, anyone got any questions on anything? Here we go. Log in. Log in. All right, here we go. Log me in. Let's buy our TV. Here we go. So Bobby Beth 203. This is the account that we want. Let's see. So we go trade, fixed income, new issues, and CD Treasury new issues. And then we'll go Treasury auctions, 0 to 1 year. I'm gonna buy 4 weeks. All right, 4 of those. So we always got some coming off, and we got some going on every week. All right, so we're buying there. Page unresponsive. All right, so let's go to the trade tab again. Fixed income new issues, CD Treasury new issues, and Treasury auctions by the 8 weeks. Half of them there, so we'll buy 4 there. Review order. Come on. Come on, little internet. Everybody in the mama's buying Treasury bills today. Come on. While that's working. Oh, I know. Ed is he's in there. He loves them things. Let's see how many we can buy over in this account. We can buy 6 in this account because I'm using up to 80% of my cash over there. Oh, come on, man. Is this my internet or is this their side? If it'll do it again. Get it rehashed here. Unbelievable. Yeah, Ed's got the site down. I mean, y'all ain't no telling how many of these things Ed finds today. Come on, little friend. Unbelievable. How's that little thing looking? Looks good. We got a 96% probability of profit. All looks good. Our little plan's working, y'all. It's working really well. Now, I do have to tell you this. I got to make some changes to my trading plan because I don't have in there. I kind of like buying these 300 wide foot debit spreads, so I haven't got that in there yet. So I need to put that in there. But I think everything else is just fine. I think we've got everything worked in that we need to have. I think also I'm going to say instead of this hedge being required hedging, I think I'm just going to make it a hedging. Okay. Hedging. So it's not required. ES puts may be purchased instead of will. Right. May be purchased. And I maybe put something like subject to the trader's risk tolerance. Right? Yeah. Because I'm thinking about, what I really need to do is really start putting more weight on the big green monster. I mean, it works time and time again, so I look at this and go, I don't see that I should be hedged for something to the downside. I mean, I really don't see it. I mean, we're fairly priced, Now, maybe if we were here, then you would say, okay, maybe put a hedge on, but I don't see it right here. I just don't see doing it. So I think I'm going to be a little more selective. Okay, did I ever buy those or not? Let's go back. Let's see. 4. Review order. Maybe it'll tell me if I've done too many. Now this is where it's supposed to update. Okay, here we go. Place order. Yeah, I never hit that. All right. So pending buy. Okay, good. So now let's go to the Crimson account. Crimson. And we said we could buy 6 of those. So I'm going to put 3 in the 4-week and 3 in the 8-week. Treasury auction 0 to 1 year. So let's put 3 here. 3. Place order. Beautiful. And then we'll go back to trade. Fixed income new issues. CD Treasury new issues. Treasury auctions 1 year. And we'll buy 3 of the 8-week. Now, watch, the United States has never defaulted on its debt. Watch, the president and the Congress won't be able to work this out, and they'll default on the debt. And guess who they'll owe money? Me and Ed and y'all. And we'll be like, oh, man. I mean, we thought these were risk-free. Now they're not paying us our money back. That'll probably happen. Okay, so we got those in. All right, so we got all that in. Actually, I need to do it in that 3rd account, too. Hold on. Sometimes I forget about my little Roth account, Roth IRA account. I don't think you missed any questions, Ed. We were wondering, yeah, Ed was probably on the phone with his broker, buying T-bills. That's what Ed was doing. So I could buy 4 in this little account. So let's go do that. Buy 4. And which account is that? That's the Bobby Beth 2030, I think. Yeah. So let's buy 4 over here.
Hey, Bob.
Hey, Ed.
Yeah, and you can keep doing what you're doing. I've had a number of conversations with people who are kind of freaking out about the whole T-bill thing. And I want to, and I've told them, and look, there are no guarantees on anything, but
no,
these T-bills are the numero uno obligation of the government. So if you sell all your T-bills and you leave it in the money market account at your brokerage account, then it's SIPC covered, which is Securities Insurance Protection Corporation, which is similar to the FDIC, which insures the banks, but the SIPC insures brokerages. These are like derivative things off the T-bills. If the government can't pay its T-bills off because the debt limit's been reached, and they can't float new T-bills and pay off the old ones, which is kind of basically what they do, then who's to say whether they're going to have money to come rescue bank failures or brokerage failures or anything with these SIPC, SPIC entities? These are all government entities. So if the government can't take care of its primary obligations, T-bill, T-note, T-bond rollovers, et cetera, they can't pay Social Security, they can't pay all the federal workers, they can't pay all their vendors. They can't pay. You can pretty much imagine that fairly quickly, within days, things are going to start grinding to a halt. Like the federal workers not getting paid or not going to be able to pay their bills. People not getting their T-bill or whatever interest on their treasuries or whatever, or they'll be financially impaired. Most of us, if not all, probably know that the majority of people on Social Security, it's the over 50%, that is all of their income. If all this money flow just stops, things are going to get chaotic very quickly. I just want to point out there really is no, in my opinion, just my opinion as always, I don't think there's a safe rock to hide under. I mean, you could take all your money out of T-bills, bring it into your local bank, go take it out and go buy a bunch of gold bullion with it and stick the gold bullion in a safe in your house. But if someone comes along and robs you of that, or your house burns down or whatever, there are implications. And yeah, if your house burns down, you can go salvage your gold. It's going to be a big lump of melted gold, but it's still gold. But you know what I'm saying? Like, and if you take all your cash and you put it in a safe in your house and your house burns, is the safe fire resistant? You know what I'm saying? This risk to your quote cash unquote, no matter where you hide in the situation. And for anyone that's worried about those risks, you really ought to take a second look at your paper assets and think about what risk they might encounter with a protracted T-bill payoff. So I won't say I'm not concerned about the T-bill thing, but it's the least of our worries if all hell starts breaking loose. And I'm a little late because you were clicking the buttons, but one way to avoid the shortest term risk is going with the 2-month and not the 1 month, because I don't think the government's going to default for long if it does default at all, because it just can't basically afford to. There'll be too much chaos. It's going to create a huge downdraft. So if you buy a 2-month, it doesn't even pay off for 2 months. And that should be at least a month into the chaos that would, you know what I'm saying? Like, it gives you a wider window. I don't think the 1 month is at risk. I just wouldn't, risk my hand, I wouldn't bet my right hand on it. But, and I don't know what happens if they go into default and your T-bill matures and they can't pay you off. Do they keep paying interest on it? Does it just sit there and you get your principal back, which is my guess? I don't think they're obligated to continue paying interest on it, so I don't think they would. So there might be a period where you don't earn any interest on it. But if you look at where rates are, on the 3rd, they were at 470, and on the 4th, they were at 576. Yesterday, they were at 551. These rates are like 1% to 1.25% higher than they were, and that is fear of default being priced in. And by priced in, you're earning more yield in case they don't pay, in case they do go into default, and you got a week or two, you're actually earning an extra percentage point. That's the risk premium being baked into these higher rates, if that makes sense. So that's a lot of blah, blah. I just want to throw it out there for those that might be thinking, wondering, or worrying, or thinking they're being clever by cashing in all their T-bills and bringing all their money into the local bank or whatever. Like, you can do whatever makes, a person can do whatever makes them feel comfortable, and they should. I'm not discouraging that, but I don't think there's really a great safe place to hide going into this event. And if anyone wants to mitigate risk, and I'm not saying go hide under a rock, I would say throttle your position and buying power level lower than normal going into this event, just in case, just in case. No one should look back. It's missed opportunity versus lost opportunity. Do you want to risk your money going into this event, or do you want to not make as much if things go well? If things go well, the market will probably rally and you'll be left holding a light bag of theta, and you won't make as much money. But, we're down 0.5% today. Where are we going between now, May 9th, and May 31st? If the hooligans in Washington can't get their heads straight. So, that's kind of it. And again, I'm not saying for anyone to cash everything, go hide under a rock. I just think this might be a prudent time where it's almost like a potential bombshell event, but we've been sent the message. It's not out of the blue. We're not waking up overnight and some of the crazy things we talk about happened while we were sleeping. This is out there for everyone to notice, pay attention to, and act to or react to ahead of time. And so there's an opportunity now, and as time goes on between now and then, to tweak your portfolio into a comfort zone from that standpoint. And, maybe if you're normally at 30% buying power, maybe you want to trend at 20% between now and then, leave yourself 10% for buying power expansion so you can put some risk on if the market explodes or whatever. I'm just saying it might be an opportunity not to close the book, but to trend low and take it from there. I'll hand it back off.
Yeah, I think what I hear you say, and I agree with, is the real risk is not the default on the, on the debt. The real risk to us is the market risk. If they, create a lot of drama from this, then the equities markets may feel that effect.
Yeah. And then one more thing, for those of us that do stuff our portfolios with T-bills, that might you might need to go in a little light on them as well, and or leave some surplus cash in your account, because if there's a default and if they can't continue these T-bill auctions, and if your T-bill matures and they can't give you your money back, that also means you're probably going to have limited liquidity for selling those T-bills if you need the money for buying power purposes if we have a market event. So usually I'm all like, don't worry about it, click a button, within 5 minutes it's all done and your situation's good. I don't know if they're going to continue secondary market treasury action or not. My guess is they will. But if we're in a default, there might be an extra risk premium in there, just like this risk premium we're talking about on the 1 month. Basically, it's 1% higher than it would be all things equal, maybe even a little more. When you go to sell into the secondary market, that same situation is going to be there. Like there's going to be an extra sting in your principal value to sell under that distress moment, I would imagine. No one knows for sure. So I just want to throw all that out there.
Drew had a question. Sorry if I missed it, but have we ever looked at the difference of T-bills versus just doing SPX box spreads as far as ROI? Know that T-bills are safer.
I think that is a question. No is the one word answer.
Yeah.
The lengthy answer is that's kind of what Wacky Weed Chris does.
Mm-hmm.
And I don't know if Chris is in here or not, but I think that question probably, Drew, ought to be go put that in Chris's Wacky Weed room and ask him. I don't really understand the box thing.
I don't either.
Well, he explained it, and then he had a little video thing that he also explained it in, and my brain is not absorbing it all. So I can't answer that question. I just can't. And the other alternative is don't mess with T-bills. Just put it into like a high yielding money market account. There's been a lot of chitter chatter depending on where you are and what you have access to. You can put it in Schwab's blah, blah, blah money market fund. It's paying 4.3 or 4.4. Interactive Broker pays 4.3 or more on their cash sweep vehicle. Just remember the liquidity and those things are also going to be derivatively impaired. They're steps away from the T-bill splash, if you will. So if you can't get your T-bill money back, those people are very likely putting all their money into T-bills. And they're earning the 5%, and they're paying out 4.4, and they're making the spread in that little interest vehicle itself. So again, I don't think that's a rock to hide under. Look, there's one. Matt just posted one, SWVXX. So those are out there. My opinion is they're no safer than anything else. In crises, the government comes in and backs up the money market funds. It did it in 2008 and 9, whenever it pulled the trigger then. It did it during the COVID debacle. It would have done it now. I don't think it did now, but it would have if it had to. Maybe they did it and I didn't hear about it, but they'll back that up. But again, that government backup is based on the full faith and credit of the government. And that full faith and credit of the government at that particular snapshot in time does not enable the government to meet its direct obligation on these T-bills, T-notes, and T-bonds, as well as Social Security payments and all these other things. So their backing of the money market system, where there's trillions of dollars, is there, and they can pull the trigger on it, but they may not have the means to actually back it up. So I'll stop my novella.
Okay. Good stuff today, y'all. And we're looking forward to seeing everybody tomorrow. Y'all have a great rest of your day. We'll see you tomorrow.